You're calling it SPAC IPO is one of the best wells of new idea generation. Explain why.
Well, I'll tell you, part of it is simple, Carl. That's what we're hearing from large, long-only investors in the street. So that's where we're taking our cues. So when I talk to, obviously, my formal life on the sell side, I've got a lot of contacts, institutional investors, portfolio managers, and that's what we're hearing from them is that in today's market, their best ideas are coming through the new issue market. And as you just mentioned, SPACs, but not just the front end, but more importantly, the back end, the companies going public through the SPAC. That's where they're telling us they're getting some of their best new ideas right now.
So how are you advising investors, or I guess even our viewers, to keep an eye and take advantage of this wave, but also keep one eye on the long-term sustainable business models that we'll see on the back end?
Right. So for the bulk of investors, look, they're going to be, I advise them to mainly participate on the back end, right? The merger agreement with a target is announced. There's a merger agreement that's filed, and you dig in and do your research. At the end of the day, Carl, we think a lot about on the back end companies, using this route to go public, a lot like an IPO. And the bar is high for us in terms of the quality of companies that we're going to be taking public through the SPAC, process, through that product. And I think for investors, they need to have that same sort of, eye and diligence and work that they do with any investment that they make. So go through the filings, learn the business, and decide if you think it's a good investment or not. It's really not a lot different than an IPO for, I'd say, the bulk of investors that are out there.
But Mark, I wonder, as there have been so many SPACs that have entered the market just in the past couple of months, as they are all looking for deals in roughly the same size, how does that change the price? Is that going to drive up the prices of these potential SPAC deal targets because everyone's looking for them?
Well, you're right. There is a supply-demand imbalance in terms of the number of SPACs looking for targets and the number of targets looking to go public. So the primary thing that we see that causing is not so much the valuation, because look, at the end of the day, they have to price these things for institutional investors to invest them either in the pipe or in the open market. Primarily what we're seeing is it's causing the SPAC sponsors to have to be much more competitive in the terms that they're offering targets, because I'm sure you've heard of the term SPAC offs. There are a lot of SPACs vying for these targets. And so what really ends up happening is part of the merger agreement, which is the M&A element of this transaction. Those terms are coming down in the favor of the targets. And what does that mean? It means that now the dilution that you take on by going public through a SPAC is really not all that different than the dilution that you take on through a traditional IPO. And then the company we're dual tracking more and more of these processes, IPO and SPAC, and we're able then to focus more on the benefits of SPACs. And there are many.
Shepard Smith here. Thanks for watching CNBC on YouTube.